The question I always get asked is how to predict how much taxes you pay. And it's really simple in Australia, right? When we look at selling our business, we can do a quick calculation on how to sell it, right? So I've got the slide up and we talk about selling a company, and this one was a fertilizer business for $9 million. But the tax paid on selling this was 2.25 million. And the guy, very upset at their previous accountant, which is why we took over. But the damage was already done. The damage of structuring and the mistakes of that structure was already done. So what do? We issue a $9 million dividend. Yippee! A lot of money. Fantastic. Franking credits, 2.25 million in franking credits. Personal tax now is $4.7 million, which is bonkers. Less our franking credits gives us an additional tax to pay. So in simple terms, that because they structured this wrong, when they went to sell the business, 4.7 million gone to the tax man. If this was set up properly, then it would have been under a unit trust or a family trust, a discretionary trust. We would have still sold the same business for $9 million, but this would have generated a $2.5 million tax saving by having a better structure. So you need to be really careful when we're doing business of why we're doing the business. Are we doing it to sell? If we're doing it to sell, make sure your structure is proper. But most importantly, why do you want to have financial freedom? What does financial freedom mean to you? For me, financial freedom is to do what you want, when you want, with who you want. And to achieve that, to achieve it easier, is to pay the least legal amount of tax as possible per year and to invest the money to compound your wealth to get out of the rat race. Because financial freedom, you're either going to live off the age pension or you're going to be self-funded. Again, comment below. Let me know what you think. Who thinks living off the age pension is fun, right? Comment. If you think being self-funded would be much better, tell me why. Why do you want to be self-funded? What freedom do you want to have? What do you actually want to do in your retirement? These are things that everyone should be considering and be thinking about. Because really, there's only 4 types of income in Australia. 4 types of income, 4 types of making money. Think about wages. Wages right now, we talk about, paying top marginal tax, 47%. You could earn $1 million and pay 47% on it. You could run a business, a small business. You could run a big business, something that's, if you take the owner out of that business, it doesn't collapse. Or you can just be an investor. Now, why is this actually important? This is very important for tax. Because if you think about it, how much tax we pay here as an employee, right, will dictate how much money we can invest. How much taxes we pay as a small business owner, an entrepreneur, will determine how much we can invest, and obviously running a business. But if you can take the business owner, if you can take the person who set up the business out of it and it still runs, that's a business. If you can't, then you've got a small business. And it's really careful. You've got to be really careful about that difference in definition. Don't let your ego get in the way. But most importantly, all these can result in you becoming an investor. And then the question's got to be, if you want to become an investor, if you want to become self-funded, if you want to have the least amount of tax payable, then you got to work out how much money should you invest per year? How much money do you invest in yourself? How much money do you invest in wealth creation? And how much money do you spend on lifestyle? Because when you look here at the wages, right? Wages, you pay 0 to 47% in tax, right? As an investor, when you sell something, right now under tax law, when you sell something, you're paying between 0 and 23.5% in tax if you've held it for more than 12 months, right? We can also, if you've got, depending on your situation, we may be able to transfer, that's a bad arrow, we may be able to transfer that money into a self-managed super fund. We may be able to get even more tax concessions and be around that lower amount of money being that 0% tax. But we can do things. As an employee, we can't do things. We're stuck. You're only allowed to claim a certain amount of deductions per year. And that's why I think it's critical, absolutely critical, that when we're looking at our investments, right? When we're looking at what we're going to do with our money, what are we going to do with our wages? do with that business income. And for me, if you're not at the right bracket, you should be investing in yourself. If you're not at the right bracket, you should be investing in your wealth creation journey. And maybe you got to take a step back on your lifestyle. I'm Gary Brown. Keep investing and take control of your financial future.